Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be speaking about AUDUSD. So as usual, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly demand and support area. From here, all these previous rejections to the upside have been created. Every time that the market tested this zone, it rejected it to the upside quite aggressively. At the moment, the market is testing the exact same zone, has already started rejecting it to the upside. So there is definitely the possibility of seeing more bullish continuation being created away from this area. So the monthly time frame does seem quite bullish. We can also notice, if we zoom in into the most recent price action, that the market has just created this inverted head and shoulders. And with the creation of an inverted head and shoulders, bullish price action could be expected. From a pattern standpoint, we can also notice that as we have an impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.618 and 0.786 Fibonacci retracements, which were lining up exactly with this previous high, which create confluence of support and demand here, meaning that instead of a confluence of support and demand, which essentially means that there are multiple layers of support in the same area of price, in this case, both the Fibonacci levels and the horizontal structure, that shows how there is an increased probability of seeing institutional longing inside of this area. And we will be speaking about institutional longing in just a few minutes when we move to the commitment of traders. But for now, let's just drop down on a lower time frames and keep in mind that we are rejecting confluence of support from a monthly standpoint. Going down on the weekly time frame, we can see how the structure is currently quite bullish, testing and rejecting previous weekly resistance, which was acting as resistance all across the zone, which is now turned support here. From here, there is definitely the possibility of seeing more bullish price action being created away from this area, and for the market to start to establish this bullish trend from a weekly standpoint, therefore creating weekly higher highs and higher lows. Going down on the daily time frame, what do we see? Now, here in the daily, this is where price action starts to be very clear. In fact, we can easily identify how the market is at the moment in a range from a daily standpoint. We have the bottom of the range here, we have the top of the range here. Until the market will remain in between these two levels, we really don't have anything interesting, and we could simply expect more horizontal price action to be created, meaning more ranging from a daily standpoint. However, a break above this range would mean that at that point after the break, we have an increased probability of seeing even more institutional longing, because at that point, the monthly, weekly, and daily time frames would all be aligning for a potential continuation to the upside. So after the break on the retest, if we start to see institutional longing inside of this zone, that would increase the probabilities of a potential rejection to the upside away from this area. Speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's check the data precisely for the AUD. Now, if we're looking at the data for the AUD, we're actually already looking at AUDUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, a massive amount of net positions got increased. In fact, we went from having minus 107.5k net positioning all the way up to minus 23.6k net positioning, one of the highest net positioning that we had in quite a long time on AUDUSD from an institutional perspective, with another 8,900 longs added just with the last report and 9,000 shorts getting closed from an institutional perspective on this pair. So AUDUSD is getting quite strong from an institutional standpoint. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily standpoint, we have already identified the range. Inside of a range, the most common patterns, by the way, are W and M formations. In fact, we did see many of them inside of this range. I also spoke about AUDUSD just a few days ago after the market had created this M pattern, and then we had the creation of this W formation, and I explained all the reasons for which we could expect this push to the upside. And in fact, that is exactly what the market gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education as well. However, as we were saying, the only situation here where all the timeframes and the COT data would be aligning to the same direction is not if the market remains in the range, not if the market breaks below the range, but only if the market breaks above the range. At that point, all the different timeframes and the COT data would all be aligning from a directional perspective for more bullish continuation. So if the market creates a break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I will see you in my next breakdown.